Micron's moment is a good one, obviously, for that stock. But it's really interesting, this price action in some of these other names today. I'm wondering, Josh, what you make. I mean, it's a continued rotation. There's no doubt about that. But if you thought that Micron was just going to, relaunch the entire AI space with their blowout quarter, not happening today.
Oh, I disagree.
Well, look at the hyperscalers.
That's not the AI trade. We've been through the AI trade is not the hyperscalers. The hyperscalers are the people that are facilitating it with their spending. The AI trade is working really well today. 8 of the top 10 S&P 500 stocks on the day today are all a huge part of the AI build-out. They're just not hyperscalers. And this is what the market's been doing all year. It's not even new. Look at our stocks today. Corning, Flex, Applied Materials, Teradyne, Caterpillar, Western Digital. These are the top 10. DRAM ETF is up 9% today. The XLI is up 2% today. And I promise you, the leaders in the industrials are all AI infrastructure stocks.
Yes, Cat's like Caterpillar.
Cat's up 4% on the day. You also have other areas that are up. You have XBI doing well. You have the home builders doing well. That's interesting. The transports are up 2% today. But the AI CapEx theme has swallowed the market this year. Unfortunately for the hyperscalers, they're in the position of being the spenders on AI equipment, and they're not getting the benefit from their shareholders any longer. As a matter of fact, the Mag 7 as a group are dragging down the returns of the S&P 500 year to date. So that is the first time I've been able to say that in a very long time. Those stocks are net detractors, especially Meta and Microsoft. Very big in the index and very negative on the year. So we've got the AI trend in full force. Micron made everyone feel even better than they did yesterday. We just don't have the participation of the companies who are footing the bill.
Okay. Obviously, that's a fair assessment. I think that there were some out there who were thinking that this was a critical moment for the AI trade at large, that if because the mega caps have traded squirrely lately, right? And you had a NASDAQ surge in the pre-market. Surge, and that's all but gone for a variety of reasons. SanDisk is up. Speaking of things that are winning, the power players, in part to Josh's point, Steph, right here alone is a great place to look of the stocks that are getting a big bump off of Micron.
Yeah, and the industrial companies are definitely the winners, for sure. And I've talked about the food chain, or if you want to talk about Jensen Huang and 5-layer cake, it's the same thing. It's the hyperscalers are spending $800 billion this year. They're on CapEx, and they're going to spend $1.6 trillion next year. This is not going to end anytime soon. So you want to own the companies that are building out the data centers. And we know data centers takes 3 years to build, $40 billion for a 1 gigawatt plant. So there's a lot that goes inside of data centers, and those are the winners too. We've talked about the grid and how old the grid is. That needs to be upgraded. And then, of course, you also need power, and we simply just don't have enough power. So the one thing that Micron said yesterday, and I'm sure Joe owns the stock, so I'm sure you're going to go through it, but they announced 14 strategic customer agreements, securing $100 billion in contracted revenue, $22 billion in cash, just to secure capacity. And they're sold out until at least 2027. So this is going to go on for a long period of time. GE Vernova, Quanta Services, Vertiv, all of these names we've been talking about for 3 to 4 years. But the point being is you want to stick with them because the backlogs have never been larger. I have been covering industrials for 35 years. On average, backlogs are growing any give and take 5-10% a quarter. Year over year, you're on average up 35 to 40% in backlog growth, and it's only going higher. And I just say one last thing, because it's really powerful, and pun intended. Quanta Services, their total addressable market has gone from $960 billion between now and 2030 to $2.4 trillion. This is a very conservative management team. They have 70% of their customers are utility companies. And so they are benefiting, and all these other companies are as well. But just listen to what the management teams are saying. You don't have to listen to any of us. But we have been investing in this theme for quite some time, and I will continue to be overweight this space.
So yesterday, maybe not so much on this program, but I think a little bit, and certainly on Closing Bell, in the conversations that I had leading into the earnings report, really centered around Micron the fact that traditionally these have been highly cyclical businesses, chips, right? And that this time was in fact not different from the past. And that was giving people pause at the run in Micron. And I think you can make an argument today that Micron's earnings report suggests, no, in fact, this time is different. And that this is a more secular idea around these types of chips specifically. And investors have had a hard time getting their arms around what they know historically to be true versus what is happening now. Not that the PE on this name is exceptionally large, because it is not. Maybe from a historical standpoint, you could make an argument that maybe it's a little more pricey than normal. But this, to me, just opens the door, it's almost 10 times, opens the door wide open to the conversation of this time is different. As it relates to memory, it certainly feels that way.
I think yesterday there was a paradigm shift. I think there was fundamental validation that this is not a cyclical commodity moment for Micron. This is something more powerful. This is secular. This is not to be thought of as purely a commodity. This is a irreplaceable resource. Think about the difference for a second. An irreplaceable resource that the speed of AI accelerators, they basically get frozen without the memory component. If you think about a commodity for a second, which I called it yesterday, okay, and I'll share with you where I was wrong. If you think about a commodity for a second, there's the elasticity as it relates to price, right? As price goes higher for oil, what ultimately happens to demand? People say, okay, I'm going to drive less, right? There's price elasticity. With an irreplaceable resource, there's not. And the ability to sign 16 strategic customer agreements going out to 2029 to secure pricing and your revenue, that's a very powerful force, and that's the paradigm shift.
But you said yesterday, ahead of the number, you wouldn't initiate a new position. You thought the stock could trade lower. I feel like you were, maybe inching more into the, well, we better be careful with this thing now, given the price action in the name. But again, I think I made the point yesterday. The biggest tell to me heading into this print had nothing to do with Micron directly, but a derivative of it, Apple raising its prices. The report of a week ago suggesting that Tim Cook suggested there was no other choice, but to raise prices because of what they saw happening with memory
Stock
pricing.
rallied on that news too. You're right.
So look.
Wasn't that a great tell?
It's
like you think that they will raise their prices.
You made an excellent point yesterday, you're making obviously the same point today, which is the right one. I took the perspective yesterday from a risk to reward standpoint. I didn't like the setup. I didn't like the setup. I didn't like technically the distance that price was from its moving averages, how much it had rallied. And I advised the viewers who didn't own it not to rush in and buy it today. I would say this to those viewers today. I would
look to your left as you talk.
Here's what I would do to design a strategy. I would buy 25%. Let's say you're going to buy 100 shares. I'd buy 25 shares at some point this week. Get it out of the way. Below the market, I'd put an order in for 50 shares at $9.50 and another 25 shares at $7.50. If you never get those 75 shares, at least you're participating. You have to understand, there are people that are in this stock from $100, $200. Our ETF bought this stock at $223. It's very difficult to discuss one-day moves, and I was incorrect in doing so yesterday, but this is very clear. This is a fundamental shift where they literally are controlling pricing on their own because they have, and I'll use these two words again, the irreplaceable resource.
Their ASPs
this
on
is a
DRAMs
stock that actually fits many boxes, okay? Because I'm in it as of today. I initiated. Not a huge position, Joe, because obviously, as you say, it has appreciated quite a bit. But I'll take the other side of the narrative that you laid out. Not to be provocative, but because what I believe is this is a cyclical stock. It's just a question of where we are in the cycle. And I would say, at worst, we're in middle innings. At some point, a replacement will come along. At some point, supply will pick up, but it's not anytime soon. And to the multiple that, Scott, I think you said it was 9 times, whatever it was.
Almost 10.
Yeah, okay, but that is using yesterday's earnings estimates. The current earnings estimates are going to go much, much higher. We see that from the guidance that they give. Stephanie pointed out the strategic customer agreements, which again just extends this cycle. This is a stock that when the estimates come in, it's probably trading around 7 times forward earnings. So if you're a value investor like me, this checks the box, and I don't even have to get into a narrow or wide moat competition or moat to competition about whether this is irreplaceable.
The bear case on Micron is not about competition, because you're not going to have a competitor who's not already in this market show up and stand up.
No, the bear case is supply comes online. That's the only bear case.
And that's what I was going to mention. ASPs for our DRAM are up 60% and NAND up 80%. And this is why Apple has to raise prices. And if Apple has to raise prices, everybody else has to raise prices.
I would.
And that's inflationary.
Why do you think that all of the mega caps are down today? Well, because Micron's gain is a lot of pain. Now, it's more acute for Apple than some of the other hyperscalers, but I do think there's a reason that they're down as a group. I
think it's always challenging when companies are in an investment cycle to own them, because you don't get the operating leverage. You don't get the earnings growth that you can. Eventually we will.
But the bear case
I know. Wait a second, Josh. But eventually we will. And Andy Jassy has said that time and again, and all these CEOs have said it. They have to spend, but therefore you're not going to get the margin expansion. And so on the flip side, look at Micron and look what their margins were, because they have that pricing power.
So I agree with everything that you guys are saying, but I have to reiterate here. The thing that ultimately, I don't know if it ends the cycle or brings the cycle to a downturn, is that ultimately Micron is achieving all of this on price, not on higher volumes. To your point, the ASP
they don't have the
being
volumes.
Nobody can replace with higher volumes because it is what it is. However, there comes a point at which the pricing power becomes so extreme that the people who use the product find workarounds. And hang on, we had a moment with DeepSeek where all of a sudden it's like, oh, wait a minute. It turns out there are actually going to be competing models that can do this faster, cheaper. Are they cheating? Maybe. Are they stealing technology? Maybe. But still, at a certain point, that's what ultimately gets to Micron. I'm not suggesting that's going to happen this quarter. This is now a $1.3 trillion company. It's the 9th biggest stock in the country. Bigger than Lilly, Berkshire Hathaway, Walmart, JP Morgan, AMD, and Visa. And they did the whole thing. They did the whole thing on raising prices. There's got to be a limit, and the customers ultimately will find a way to do what they're doing and use less memory. And when that happens, that's how this ends.